All right, so I got my share screen up with you guys. We're gonna start with QQQ. So I used to run the pregame live and pre-recorded a while back, and when we were doing that, we were doing a top down like week, starting with the weekly chart and then dropping down. Um, I've changed the approach a little bit just because the weekly, when you put the weekly and the daily targets on there, although high time frame targets are good to know where they're at. It also makes the chart just super messy as we continue to drop down, and then you have 1 minute all the way up to 1 week. So I'm just going to look at the 4 hour on these tickers, and then we're going to drop down into some of the lower time frames. So we'll probably do like 4 hour, maybe 1 hour, 15-minute for sure, and then like, you know, probably 1 minute or something, maybe 5 minute, so that it's easier to see. So we'll do a couple different time frames, and this is just kind of what I do to prep myself for market open. And I, you know, some of these levels aren't going to change much throughout the course of the week, and some of them will change, you know, daily. And so I kind of, you know, before the market opens on Mondays, I do my prep over the weekend to give me like the weekly levels, or things that I'm, you know, anticipating over the next week, or develop a bias, you know, and then I adjust on the charts every day as we, you know, as new price develops and structure changes, or you know, different things like that. New liquidity targets open up, and then I'll adjust those every day as we go. So we'll start with QQQ, and if you have any questions, like definitely feel free to just jump in, or you can drop it in the chat. Either one, happy to answer those whenever. So if we got the 4 hour chart pulled up, the main things that start to stick out here on the 4 hour chart is that we have 2 order blocks. Okay, and I'll show you. We have this order block that originates back in September. It's again high time frame, so we have a 4 hour order block there that hasn't been hit yet, and that's going to be kind of our swing support, and that goes all the way down to 452. So I'm just going to put that level on there just so I know it's there. And I'm going to put that, I'm going to do it with horizontal lines. So I'm going to use this tool right here over on my toolbar, and I'm going to use the horizontal ray. You could also use horizontal line, either one. And I'm going to just grab one of those two, and I'm going to then anchor it. If you do horizontal line, you don't have to anchor it to anything. But if you do horizontal ray, I'm going to anchor it to this order block. And so now I know where it originates, and now it's on my chart no matter what time frame I go to. Okay, so I have my high time frame support is going to be down here. Now, if you double click or you double tap or you just tap on any line or anything that you use in TradingView, as long as it's, well, even if it's an indicator, you can basically double click or open settings for almost everything, and you can adjust things. You can put labels on it. So I'm just going to put here that this is a plus or OB on the 4 hour time frame. So then when I drop down into other time frames, I'm not going to be confused. Like, what does that line mean? It means it's a 4 hour order block, and it's a bullish order block because we pushed up back in September off of that order block. So it's on there. Next thing I'm going to do is I'm going to jump over, and I'm going to do the same thing with this high time frame resistance level. So that's our order block on buy side. And I'm going to do the same exact thing. I'm going to open up the settings on it. I'm going to put minus OB 4 hour, right? So now I know we got 4 hour support and resistance within that range. But that's still a pretty wide range. You see, we sold off of that in February, and it's taken, what, 2 weeks for that entire move to play out. Hasn't even got down to the support level yet. So we'll see if it does. I think we'll probably pop back up and then maybe drop back down into it. But we're not going to anticipate too far ahead about what's going on. I just want to know, this is my resistance. This is my support, right? So I know that there's a little bit of room left before we hit support. There's a lot of room left before we get back to resistance. Okay, then I'm going to open this up or scroll out or zoom out or whatever so I can see these candles a little bit better. Okay, and then just what I want to note, and we'll see this when we get down to the lower time frame. is that we had this liquidity level at 467.19 and it's been swept on the 4 hour. So we had a wick that went down into it and we've seen price move back up to it. Okay, and we have a 4 hour fair value gap. So that is something I'm also going to annotate on the chart. I'm going to put that and I'm going to open that up and I'm going to put sell side liquidity. Okay, then that gives me an idea of where the most local, like higher time frame sell side liquidity is, because we got the order block, but this is the most local sell side liquidity and it's already been swept. Okay, and then I want to note where's the most local buy side liquidity that hasn't been taken yet. So I'm going to put that here. I'm going to put buy side liquidity. So now I got my range, right? That's a lot more manageable range than this massive 4 hour range, right? 452 to 5, that's like what, $80 range or something like that. So now we got this tighter range, right? And that's definitely more manageable. 467 to 481. And then I'm going to mark off the 4 hour fair value gap here. And I'm going to label that also 4 hour plus fair value gap. That's all I care about, okay, right now. There's all this internal liquidity, but I don't really care about that right now, right? One thing I might look at is this volume imbalance, right? Or you could just call it a gap, but it's a volume imbalance. There was no trading that occurred within this area. And I'm going to do the same thing. I'm going to label that volume imbalance. Doesn't matter the time frame on that. And that just gives me a near-term target once we're above buy-side liquidity that we could go into. Okay, so I only really care about this fair value gap because on the high time frame, we've now swept liquidity. We have a fair value gap. We want to see this fair value gap respected on the 4 hour time frame. Right, that means we want to stay above consequent encroachment, candles closing above consequent encroachment. But ideally, we want to keep candles closing above all the boundary, the lower boundary of this fair value gap. Okay, so then we'll drop down into we'll do 1 hour. We'll just take a look at 1 hour. I'm not going to probably put any additional targets on there because they'll kind of match up. You can see 1 hour, that liquidity level right there. Same as the 4 hour, right? It was a swing high. So, and then we can adjust these just a little bit because you can see them just a little bit better. There we go. So again, we can see the sell side was swept. We push up. We didn't quite get above this high of buy side liquidity. Here is a better picture of that 4 hour fair value gap. We're respecting it. We came back down. We could come back down a little further, but we want this to be respected. Okay, we see some 1 hour fair value gaps that why we're on this time frame. Again, they could be targets to the upside, but what else do we have if we're looking for some confluence is we have this volume imbalance. It's right at the consequent encroachment of this fair value gap. So there's confluence that would be a really good target if we were to push up. Again, we can see our 4 hour order block down here. So nothing much cooking on the 1 hour chart other than what we already had on there, right? And you can also see this liquidity, buy side liquidity level. It's also inside this fair value gap. It's almost a consequent encroachment, but not quite perfect like the other one was. But again, this level basically inside this fair value gap. So you could look when we pushed up, it respected this fair value gap. The next time we push up into it, it's going to violate it. It should take it out and then head to this next above fair value gap. So once I drop into the 15-minute chart is where I start to see some of my indicators light up, right? I have all these indicators are shared on the server. They're all in my chart section for anybody who wants to use them. But mostly I have these gray boxes. They are macro kill zone time frame areas. And so they're important to me. Now I'm going to blow this way up, right? Because we have our high time frame levels already. I'm going to blow this way up. And then I'm going to look for kill zone levels that have not been taken for liquidity yet. So we have our range levels already, right? That we did on the 4 hour chart. But then I'm going to look for these levels that haven't been taken. So I'm going to look at Friday's London open low. Okay, that liquidity low has not been taken. So I'm going to throw a level there. Okay, I see we've already swept the New York AM low, okay, with these wicks. So I'm not going to put that level on there. But what I am going to do is I'm going to put this 9:30 open, which is our daily open from Friday, which is just slightly above it. So there's some confluence in that area being liquidity, but that's the level I'm going to use instead of this slightly lower one, right? And then I see we have, and when you're looking for liquidity sweeps, you're looking for whether that liquidity was taken outside of that macro, not during the macro. Okay, so like if you look at the lunch hour macro, right, we had a low and then we had another candle sweep that low. That doesn't count. That did not take the low. And then the PM session, we did not trade down below the low, so it also did not take that liquidity. So we'll throw that one on there as well. And that's like 477.19. And then we will put the PM session high. So again, we're just taking that macro level, this gray box, we're just taking the high because it hasn't been taken yet. We can also put this Thursday. Again, it's kind of right by that high time frame, but this is where we saw that high time frame liquidity sweep, right? And then here you can see it on the 15-minute, we swept down, pop back up, we swept it again, right? And then we ultimately saw a reversal happen. So we can still put that macro low. It hasn't been taken yet, but it is very close, within less than $1 to that other sell side level. And then some other liquidity targets we can put above that I see we have not swept yet is we have Monday the 10th, New York AM, this pre-market macro session. Okay, and we can put that there. We've swept that one. We already got that one. And then that macro has been taken, but there's this fair value gap, or there's this order block, but we already got a level inside that. So that's fine. So that's all I'm going to put on that chart. Now, when we drop down into the 5-minute, it's going to be the same levels, right? Because those, once we drop into the low time frame, those macros, they don't change. They're going to be the same regardless of whatever. We may see some like smaller candles do some wicking on certain levels, but generally like that box isn't going to adjust. It may just look a little different. So when we pop back down, again, this green box, that's our 4-hour fair value gap, right? You can't see the label on it because it's way out there now, but we know what that is. And here we really see the structure of those macro time frames, and we have all of our key levels put out there, right? So that's all I need as far as my levels go. Now, the next thing I'm going to do with every chart is I'm going to pop over to Gamma Edge. You guys should be seeing Gamma Edge now. And I'm going to look for Monday. I'm going to look for Monday's QQQ levels. And then I'm going to run that against the commands on the QQQ over at Gamma Edge, which you guys don't have access to if you don't have Gamma Edge. But basically, I'm going to run NetStat. NetStat is the one that you guys see. You see Delta using. You see me posting. I think it's one of the best commands. It's the one that has the charm on it. And so I'm going to just, for Confluence, see if any of those levels change based on, or not change, but are, in confluence with some of the levels we already have. If they're different, then I'm going to add them. If they're the same or similar, I'm not going to probably add them. I might label them instead. So I'm going to pull up, I'm going to take a little screenshot of this because you guys can't see both screens as I do it. But I'm going to check this Gamma Edge. And what I see here is we got, positive gamma. It's very call dominated. We have a lot of positive delta. So that means dealers are going to be motivated, 475, right, and above to push price higher. 480, right? If we got over 480, they'd be, motivated potentially to push price higher. We could see some resistance at 482 because there's some negative delta there, right? But we also have a nice positive delta level above at 486. So if we started flipping some of this negative delta, we could make that push up. Now our gamma curve is going to cause dealers to actually start closing once we get above 480, as gamma then no longer impacts the delta because of the gamma curve. So unless we started seeing gamma build at these above strikes, then we could say, as we get up to 480, and we closed at 479.25, so that'll probably adjust like based on pre-market price movement. But just using the numbers we have here right now, if we were to get, over 480 and we did not see market participation changing these above spot gammas, above 480 gammas, and or flipping some of this negative delta above us positive, then we can anticipate dealers are closing their positions out, which could cause price to dry back down. Now I'll go back over to the chart real quick and I will paste the net stat information just up here on the chart. So we got our net stat information here, and I'm just going to, again, look over the levels that we currently have and see if we can label them or put anything in there additionally. Okay, so what I see, we'll do the right-hand plane first, is I'll just slap it in there. I'll open it up. And then I'll put that level at 482. And I'll label it right-hand plane charm. Okay, so now I know where my right-hand plane charm level is. Again, I'll go and adjust that at pre-market if these numbers change or when they change, but at least I have it on my chart right now, and it's right above buy-side liquidity, right? It's out of the money calls. It's the smaller number than the left-hand plane, but also we're call dominant. So, we could expect that when we're call dominant or put dominant, which we saw this a lot the last 2 weeks where we were put dominant on both sides, that we then continue to make that push towards the out of the money. And so in this same situation, we're in the money right now, right? And in the money calls, out of the money calls, call dominant, we could anticipate that we're going to push up on that 482 level if we continue to be bullish. Now we got our net delta levels for 480, right? And we have 480 right here, which was our macro PM session high. So we're not going to adjust that one too much. I'm just going to leave it. This is 480.60. Right here, we got the right-hand plane 480, right? So what I can do is I'm going to open that up and I'm going to put right-hand plane delta. So at least I know there's some confluence right there. I'm going to see if I can adjust this just a little bit to match up with the actual high. There we go, 480.55. So now I know the delta is kind of sitting right at that 480. And then I'm going to look over here. We got 480 also net gamma. So right at that same level. Then we're looking left-hand plane. I got 470. Let's go over here. I don't see anything right at 470. So I'm going to slap that level in. I'm going to adjust it so it's 470 perfectly. I'm going to say left-hand plane, and that was delta. And then 475, a little bit higher. Right here. 475. I'm going to go left-hand plane, and this is charm, right? And this is just for tomorrow. So what does this now tell me? Also 475 gamma, so same level. So I'm going to go ahead and just delete this real quick. And what does this tell me when I'm looking at what levels that we just put on there? Okay, I'm saying spot price closed at 479.18, and I haven't looked at QQ or the NQ futures, or seen what we're trading at right now. But just reading this chart right now, I'm saying we got our buy side target, we got our delta and charm. We're in a call dominant environment. There's lots of positive delta. Above 480, we can start to see potentially. We can start to see calls get closed out, and our left-hand plane charm, if we were to come down to it, is inside that 4-hour fair value gap. So even though consequent encroachment is at 475.81, 475 is where that charm is. So I'm willing to let price go a little bit lower than that consequent encroachment, potentially down to that charm level, but I don't want to see anything really below that as far as 4-hour candles go, closing much below that charm level, or else the narrative starts to change and we might target that 470 delta or potentially this order block and sell side liquidity back down below us. Okay, so sometimes we can look to other information besides just the smart money concepts to see, if there's another aspect of the story. Because when we know there's a fair value gap, that just means, well, we want to take our entry, our whatever time frame it is, if it's 4-hour, we want to take our 4-hour entry inside of this fair value gap. But that's still a pretty big range, right? 477 all the way down to 474. I'd much rather get the best entry possible. And typically we're going to say that's consequent encroachment. But again, having this charm level down here, I would say anything below consequent encroachment down to this charm level is going to be my ideal entry inside that fair value gap. So that's QQQ, and that's how I would be setting that chart up, ahead of schedule. Is there any questions yet before I go into SPY?
Yeah, Rustic, I actually have a question.
Yeah,
So earlier you were talking about right outside the kill zones,
yeah.
and this is just something new to me, and I just would like for you to clarify on it. So outside the kill zones, you said that's whenever you like to see liquidity be swept, not inside the kill zones?
So if we're only talking about macro liquidity, yes, it it,
Okay.
it does depend on like what I guess what the objective is, right? Like if we're in let's say we're in let's say we're in the silver bullet macro, okay? And we came from discount, or price was low, and
Mm-hmm.
silver bullets macro starts. We start low, we shoot up, and then we come back down, all in the silver bullet macro, and we sweep the low. I would be looking for an entry there, and that's fine, right? That's still a liquidity sweep. A liquidity sweep is a liquidity sweep, regardless of whether it happens inside or outside the macro. But what I'm looking for as far as these liquidity pools go is if we've already swept it, especially outside of that macro, then it's there still will be liquidity there, but it's less important to me, if that makes sense.
Okay. Yeah, no. That's all I wanted to know. I just never anyone specifically mentioned outside of it.
Yeah, and the joy of analysis, technical analysis, is that sometimes we develop our own understandings, right? And that's what really makes like a true market analyst good at what they do, is that you're looking at patterns, you're looking at information you've seen, you're taking things that you've learned from other analysts and other people who understand how to look at data, and then you're kind of coming up with your own methodology and your own conclusions. So what I've seen lots of times, similar to what you just said, I haven't ever heard it explained this way, but that what I've seen is that liquidity often gets swept outside of those kill zones, and
Okay.
then
All
we
right.
see the reversals, right? And so I think you've even mentioned before, like seeing you know the London higher low get swept, or the Asian higher low get swept during London or New
One.
York.
Yeah.
So
Yeah.
we could be in a kill zone sweeping another kill zone, right? That would still be outside of the previous kill zone, which would still count as a liquidity sweep. So it doesn't have to be in this. I don't think it has to be in this black area that is not a kill zone. I'm just saying,
Mhm.
if we got one kill zone here, we want to see that liquidity get swept outside of that kill zone. And then I'm not going to put importance on my chart for it. Any other questions? I'll jump into SPY here in a second. We'll do the same exact thing.
No, I think we're ready.
All right, let's do it. Wow, that took a half an hour for one ticker. So you guys see, like, this is time consuming. It's not like magic. I don't snap my fingers and like all the charts are all ready for us to go. And I mean, it takes hours and hours of this stuff. I think Delta, but it takes hours of like setting up charts, analyzing things to then provide the information that we do to the Discord. Um,
Oh, yesterday when I was making the video, I spent I think almost 40 minutes, and then I realized my mic was never on.
oh yeah, I hate that.
Uh,
I,
I was so pissed.
I've done that too in live sessions where people actually paid for the information, like to do the session, and then I think Raymond could tell you this, but I thought I hit record or I thought I had my mic on, and then I get to the end and nope, sure enough, not happening.
Uh,
It's frustrating, but it's part of the process, right? Okay, so we got
yeah.
SPY open. Now SPY is a little bit different look on QQQ. If we pop back out to the 4 hour on QQQ, we had that order block down here, right? That we hadn't hit yet. SPY has uh no it has no liquidity indicator shown, as far as like QQQ had this sweep here on the 4 hour. And it showed us a sell side level there. SPY has that sweep, but it showed no sell side level here. just using that indicator. We do have an order block, however, and it's in a similar kind of area. It's actually, that one's actually, I think, quite a bit deeper than the Qs, but we'll put that one on there, just indicating that we haven't hit our high time frame support level yet. Okay, which means we still got room to go if we were to go further. Not saying we will, but there's room. And what that could look like before I annotate that out on the chart, what that could look like is this: big move down, big move up, big move down, right? That's what that could look
Yeah.
like. That could look like
Yeah.
volatility in the market, right? We see some relief rally. What I'd be looking for is like some kind of fib retracement, right? Into this golden pocket, this optimal trade, right? Maybe looking at price to come into this order block here, something like that. Maybe this fair value gap just below, above equilibrium into premium price. Right. We even could overshoot it. We even could swipe that high, which would, make people think, oh, we got another bull run coming. And then we get that, that fake out and that bigger drop. So all those things possible. We'll just be looking at what happens when price does get that way. But because of the aggressiveness of this drop, we could see an equally aggressive pop. We also have a breaker block here, which brings some confluence. I don't teach breaker blocks a lot, but you got a breaker block there, right? Which would bring some confluence. Maybe we come and hit that consequent encroachment of that breaker block, or maybe we hit this 4-hour fair value gap where they overlap, right? Right there where the two overlap. That would bring some confluence to that breaker block and that fair value gap. But anyways, something like that. And then we could still see price come down here to this order block. So we'll have that on our chart. But again, we're pretty far away from it, and I don't anticipate we're going to drop there now. So I'll go ahead and mark this as a plus order block, 4-hour time frame. And then I'll zoom in a little bit, and I will notice again that we got this liquidity sweep. You can mark those on your chart or not, but if you did, it would just be, right, liquidity sweep, something like that, just so you know it occurred. It's going to show on every time frame, so it doesn't really matter. We got that same 4-hour fair value gap, right? Just like we had on the Qs. So I'll mark that off. Shrink it up so maybe we can see it a little bit better. We have not that I'm going to leave this on here, but I just want to identify this for you guys. We got a change in state of delivery right there. So change in state of delivery on a 4-hour time frame. We also get not quite a morning star, but we do get this large breakdown candle, this doji, right? It's like a spinning top doji and then a move back up. I would have liked to see that be a little more aggressive, maybe on a higher time frame. We did see, let's see if it shows on the daily as the same. Nah, it doesn't. So that was like a 4-hour pseudo, we'll call that a pseudo morning star with the liquidity sweep, right? So just some things to note. 4-hour time frame, we got the fair value gap, so I'm going to label that, right? Plus fair value gap, 4-hour. Put that down. You can adjust these to your liking. I'm going to put it down underneath on that one. And then we'll drop into the 1-hour time frame. On the 4-hour, as you get used to reading some of these, you could definitely put these levels in or not. But sometimes I like to throw in like the consequent encroachments of these high time frame fair value gaps. And if you do that and you're using the an indicator to show you, do yourself a favor, color them accordingly so you know what they are, right? I would do these red because they're bearish fair value gaps. Right? And then just again, double click those. We got minus fair value gap, 4-hour consequent encroachment, right? CE. The more things that you can do to help yourself remember what lines on your chart are, the better. I'm going to go ahead and take some of these off. I'll leave one on just so that we see. And then again, I'm going to put this high time frame support above us so that we have our kind of our true, swing high and low range. But this is a minus 4-hour order block. Oops, minus order block 4-hour. There we go. So now we'll drop into the 1-hour time frame. Actually, here, I'm gonna put that high there as well. that swing high, and then this low. So this is our more workable range, right? Our near term range. This is from last week. It's not even the high and low of the week itself, but I'm not going to mark off the high and low. I'm just going to mark off these two. This near term buy side swing point. So this will be our buy side liquidity, and this will be our sell side liquidity. And then I'll drop into the 1 hour chart, and those will stay the same. We'll still see those swing points. You can see on this one, on the 1 hour, it was a sweep, right? Push down, swept. So that was actually, you know, based on my understanding, this was kind of like a turtle soup, right? Because we swept buy side, we immediately swept sell side, even though it didn't happen in like only a couple candles. It still looks like a turtle soup setup, and then we start to see that push off. All right, I'll delete that. We usually like to look for those turtle soups on like 1 minute or 5 minute, not 1 hour. But like anything in the charts, it's all fractal. Um, time is fractal. Patterns are fractal. So we will see. We'll see the same concepts play out, and the way you can understand this is like same with head and shoulders, right? Or some of these retail like concepts. Like we see a head and shoulder on a 1 minute chart, we see a head and shoulder on a 5 minute chart, and we might see a bigger head and shoulders on like a 1 hour chart or a 1 day chart. So same thing with the turtle soups or any of the smart money concepts is that they're fractal. So you'll see them no matter what time frame. They will continue to repeat themselves. So again, we got our buy side, we got our sell side, we got our fair value gap here on the 4 hour time frame. And we have a change of character here on SPY. We didn't get that on QQQ, but we got it on SPY. So that's a good sign, because then once, if we're using like the elements of a trade setup, those elements are change of character or market structure shift, right? After liquidity has been swept, looking for a fair value gap to enter, right? And then targeting liquidity levels or using your fib levels to figure out where your symmetrical swing is going to be. So we have two conditions. We have the liquidity swept. We have a change of character. So we'll be looking to see, here's our fair value gap. We'll be looking to see if we can get price to pull back down into that fair value gap. There's your entry, right? Your low risk entry. You could put your order block here. You put your stop below, right? And then we can set that target. If we look at high, and if that high holds, optimal trade would bring us below that fair value gap. So we'll just have to see what happens if we get a little bit higher high, take the buy side, then pull back or what. But that's what we'd be looking at, is like this this Fibonacci retracement. Ideally, I'd like to see that optimal trade level, right? I'd like to see us come up here, put a new high in, pull back down into this 4 hour fair value gap, and then have our fib levels be inside there where that fair value gap holds. But we'll just have to see as price develops. So I don't want to future forecast too much on what I want price to do, right? I want to read it as it actually happens. Okay, so then we'll drop into the 15-minute chart. Again, the 15-minute is where we start to see that indicator give us our macro time frames, and so, or our kill zones. So now I'm going to blow this up, and I'm going to start to look for, I'm going to make my adjustments so that they're right on the exact levels. Sometimes harder when you're on the higher time frame. So I'm going to dial these in as that high and low. Okay, and then I'm going to look and see what levels haven't been swept already outside of the macro time frame. So what I do see is I see a low right here that has not been taken yet, 554, right? I see, again, same with Qs. We saw that New York AM high or low taken after hour or after that macro with a sweep. So what I'm going to do instead is I'm going to put this level, which was the 930 open from Friday. Okay. And then I also see we haven't swept either of these levels. They're both very close. One is our fair value gap open, and then this right here. You could just go with one of them. I'd actually probably leave the fair value gap open off, just because it will show up in the fair value gap. So I'll put this macro level here at 560. Then I'm going to go ahead, and you can see we set our high at market close in that 15-minute candle. So there's our high. 563.85. And then I'm going to scroll out a little bit and I'm going to see, are there any other kill zone macros that we have not taken yet? And I see there's a silver bullet one right there. And then we have a 1 hour, we have a 1 hour fair value gap that you can note. And then there is an order block here. And I'm not going to put the whole order block because we do have, that's not a, that's a weak open. So actually what I'm going to do is I'm going to put that whole 1 hour order block right there as well on this one. I don't know if we had it on Q's. I'm going to put minus order block 1 hour. And that's going to be kind of, in my opinion, this is going to be your market maker model, right? We got our sell side and now we're seeing our push up. We want to see a retracement. We want to ideally stay above 551. But what we're going to do is probably, and this is just anticipating, but if this plays out to our market maker sell to buy model, right, which would complete our market maker model, what we're going to see is price push up above 565.98, right, up to or above, and then we're going to see our drawdown, right, maybe this 4 hour fair value gap, or maybe back to this low. That would kind of give us like a inverted head and shoulders look, right? And then we're going to push up to these order blocks, which would then complete the sell model to buy model. Okay. And that doesn't mean, you can see we still have a lot of additional selling, but the market maker model is just buy side to sell side. And then oftentimes we'll see, resistance come in an order block, and then we'll see price cycle back down, because then we're in buy model, right? And then sell model. And then if the greater, this is where sometimes it gets a little muddled, because it's always kind of like buy model to sell model to buy model. But it's like, what's the greater trend? So right now the greater trend is selling. So our buy model, once we hit buy model, right, we might find resistance in these order blocks, where then we'll hit sell model and we might come down and find resistance in this fair value gap, or we might come down and set a new low because the overall trend is selling. Okay, so we'll just have to, again, wait when that happens. But for this buy to sell, or the sell to buy model, we're looking for, price to come probably back up to like 475. And again, you can see this in like fractal modes too, where like if you look here, we got a sell model to buy model, right? And we came into this order block, right? Same thing here. We had a buy model to sell model, and it follows the overall market bias of price going lower, right? Buy model, sell model. And you can see we didn't ever get higher than the original highs back here as we went sell model up to buy model. So always, price is going back and forth in these buy sell modes. So we got all of our liquidity there. And then we'll do like we did on QQQ. We'll jump over here. We'll hit SPY on the Gamma Edge. I'll go over to the Gamma Edge platform. Again, I want to remind you guys, like, maybe we should figure out a way to post some of the commands up in our server so that you guys could request commands to be ran. We try to post them for some tickers when we can, but if you're not going to get Gamma Edge yourself, which I do highly suggest if you are serious about understanding Greeks and options, and you're at the level that you think it could be beneficial, still highly recommend it. But I have it, Delta has it, Fatazi has it, so you can definitely hit us up for commands to be ran. Netstat, I'm going to run that command, and I'm going to run it for SPY on this one. Waiting for the Gamma Edge, the web app to load SPY for us. Come on.
Oh no.
Come on.
This is always something.
Especially on the weekends. Especially on the
Yeah.
weekends. Like sometimes I'll be sitting here and I gotta wait like an hour before the web app loads up. But you know what? I don't have a lot of problems over the week or over the market trading hours. I mean, there has been a few, but I got it to load now. So here we go. Their server sometimes is just like slow, or different things, technology. All right, so we got the 17th pulled up here. I'm gonna grab grab my netstat command here, and I'm gonna go ahead and go back to gamma edge real quick and just give it a quick look. So same thing, not same, but not with QQQ, call dominant, right? Lots of positive delta. You could expect this 237,000 net delta to potentially hold us for support, right? But unlike Qs, we have a large negative delta above us at 565, right? With also negative gamma. So although we do have, a decent gamma level here that could draw price up to it, we also have some resistance where QQQ, again, its resistance was minimal and it was a little bit higher. So currently we're below both the gamma, the positive gamma and negative gamma highs. So anticipating again that 560 would hold us, 564 would draw us in, 565 could offer resistance above their negative delta. So 565 up to 569, that's going to be a tough area to get in and get through unless we start flipping that with overnight trading and futures. And we could see that turn positive, and then we could run up on some of these other levels. So we'll just have to see. We could also look at 318 and see also call dominant, right? We don't really have much resistance. I think Delta refers to this as the drunken sailor range, which I'm not super familiar with, but it's still all positive delta here, right, with less resistance. So when we look at these two different days, 565, right, 565, where 565 could be resistance, 565 is also a level that could send us through it up higher and maybe later on in the day, right, as we try to push up based on the next day's gamma and options readings. But either way, we'll take a look at this. Now let's jump back to the chart, and you can see we got 565 on there, right? And we got 560, which we were talking about here, right? 560 holding us, 565 being resistance. So
And then we have
go ahead.
that 4-hour fair value gap. The consequent encroachment is right around 558, 559.
Yeah, within that zone, right? Within that 565, or no, sorry.
5.
Yeah, right below 560. So right below here.
Mm-hmm.
Yeah. Okay, so let's see if we already basically have these levels on the chart, right? 565, we got 565.98, so it's a little bit lower or a little bit higher. And so you might see 565 offer resistance where we don't push up to that buy side liquidity. That's a possibility, right? Because our order block is actually down here, 561. That's a giant rejection wick. There is going to be liquidity in it, but we'll see. 565 could hit without the buy side actually getting taken. Now I anticipate that we'll probably reject somewhere in there, and then we'll push higher, like based on again maybe Tuesday's readings. But we'll just see. But I'm not gonna. I will put that one on my chart separately, just because it's about $1 difference. Anything less than $1, I probably wouldn't mess with really if they're that close. But we'll put that one on there. So this is right hand plane. Right, and it's going to be, I'm just going to put it in as charm, but it's also delta. You could also put both. You could put like something like this. But when they start to separate, then you end up with two levels. So I'll just put one. I'll just put charm. Gamma is also right there at 564. But I have a level right here at 563.79. That's too close. I'm not going to really worry about that gamma level. Then I'm going to look at left hand plane. We got 560. Right, and we got our level right here at 560.25, and then we have that 4-hour fair value gap starting at 560, which was also lunch macro liquidity low, right? So again, we left it off on our chart just because that's where the fair value gap starts, but confluence in that level acting as support, also being inside that fair value gap. Now, nothing says that we can't overshoot that by a little bit. Again, we got that consequent encroachment down here, but 560 should hold us based on our gamma levels. So if we start to see price come down here, because it's delta, charm, and gamma all in one. So if we see price come down here and have a reaction that we're bouncing off of it, we may never actually come back down into this fair value gap. Sometimes that happens. We just bounce right off of it and then just start running. So we'll just be watching those areas. But we got let me put that back on. So I'm gonna label this as our left hand plane. I'm just going to put Greeks on this one because all three all three of our major Greeks are that same level at 560. Um, I'm actually going to just adjust this because even though that's a liquidity level, I'm just going to adjust that down to 560 just so it's perfect. And you can see again, it's sitting right on that 4-hour fair value gap. So now, no matter what time frame I drop down into, I got these key levels, waiting for me. And then, basically, when you're looking at, where our pivot points are going to be, that's going to potentially push price lower or higher. Sometimes if it's not, it just depends on where it is. But I would probably say if price dropped below 560, then we can target consequent encroachment of, so that would be my pivot here, right? Is 560 bear pivot below 560? I'd be looking at 558.48 for consequent encroachment here. I'd be looking at this 930 open price of 556.16, and then I'd be looking at 554.10, and then all the way down to this order block. Bullish pivot would not be all the way up to 563.85. It would actually be, for me, bull pivot would be price above this swept high. Okay. And you could put that in there or not. Bull pivot. Again, I haven't looked at today's price, so I don't know if we're already above that, or if futures is trading above it, but that would be my bull pivot right there. So the range is a little bit tighter, and above 562.83. Again, I'd be looking to take out this 563.95, run at our right hand charm, right, and our delta level, potentially then to buy side at 566, additional liquidity at 567.39, and then as high as, right, this 4-hour fair value gap consequent encroachment. And for me, market maker sell to buy model would complete somewhere near maybe this week open or this order block here. Right. So that'd be what I'd be looking for this market maker model to complete there. Any questions on SPY?
May I ask, when you started this, there was an order block at 519.
Yep.
That's like down the road then,
Down the
right?
road, way down the road. Yeah.
Okay.
Yeah. So
Okay.
I don't have it on here, but let me just throw up our RSI, right? Here's our RSI.
Yep.
Okay, we've come off of this like just aggressive deep selling, riding the oversold conditions, and this wiped out everybody, right? What at least retail typically anticipates is on our, especially on our higher time frames, that we hit an oversold reading, and then we're looking for price to like pretty quickly bounce. You know what I mean? If you look here, we got oversold, right? We hit some divergence right here over
Yeah.
one day, and then we see some nice relief. Right here, we get another oversold reading. We get a what's that? A gravestone? Is that what I think that's what that's called? Gravestone or falling star or whatever they call it. Doji candle here at the bottom, right? Oversold, and then we get a relief rally. Right here, we get an oversold reading here. We get a bullish engulfing candle, and we get a relief rally. So here we get that drop down, right? We get that drop down. We get barely any relief. Boom, drop down again, oversold, right? We get barely any relief. Boom, drop down, oversold. And so we just keep hitting that oversold. Now we're seeing some life, right? So now we're expecting maybe we'll see a relief rally up to like maybe 597, right? Or we'll do that. We drew that fib out, see if we can get that golden pocket somewhere. But then that's where you start to get weary, right? Are we going back up to new highs, or are we going to drop down into this order block?
Yep.
And with so much
Okay.
uncertainty in the market, you just never know, right? Like, does Trump come out and say some bullshit on some tariff stuff, or does he, send us to war? Or you just don't know, right? So like,
Yeah.
what you do is you try to trade the more certainty, right? And what we typically know is that when price has made a move down, we're looking for like a retracement back up to 50%, up to like 70.5%. Right. That
Okay.
happens frequently with good. We can be pretty confident that you'll get a retracement back into a 50% or so level. So we can trade that. Once you start getting higher than that, that's when you start to say, okay, I'm going to reduce some risk you know, if we go a little bit higher, great. Like I'll leave some runners or I'll leave some shares on the table, but I'm not going to leave all of them on the table, because if
Right.
we aggressively drop all of the sudden, then I just got slapped and I lost some more money.
Yep.
Or I'm down on my gains because I didn't lock the profits in. So we want to trade these early reversals, right? That liquidity sweep, this 4 hour gap, and then we want to trade it up to our liquidity targets, right? This fair value gap, this order block, or
Yep.
whatever, and then we start reducing some of the exposure.
Beautiful.
Yep.
Okay.
Yeah, I
Thank
will
you.
note something. Whenever Rustic's talking about, we got a little breath of air. After that, we got that oversold condition. I've been watching the Spy web app day after day after day, recording pretty much everything. And this is actually the first day, I think within the past 7 or 8 days, maybe 10 days, that we have seen positive delta below us and above us. So that becomes some sort of certainty for me that we can expect some sort of green day tomorrow. But that's nothing certain. But it is a confluence from historically us not having that for the past 10 days.
Jeez. Yes. Great.
Hey, hang tight real fast. I gotta go unlock my door for somebody, and I'll be back in like 1 minute. Delta, you can chat for a second, or I'll just be right back.
Yeah. And, with Gamma Edge, they use something called a market trend model. And that's pretty much the same thing what RSI is. They just use a different variant of it. They use something called
Oh,
cumulative tick. So say
okay.
some
Is that what you posted earlier? Um,
like a
from,
while ago.
yeah, there
Yeah,
was
I
a
did.
DH um, Gamma. From your Gamma friends, you posted something right before the meeting tonight.
Right before the meeting tonight. No, they were talking about that. My mentors at Game Edge, they were talking about how they were pretty much saying the same thing. Um,
Okay.
I can't recall exactly what they said based off
Yeah.
of what I put in the chat, but I'm pretty much saying the same thing you're saying.
Yeah. Okay.
All
Well,
right,
Yeah, so
that's great.
cool. I'm back. Sorry about that, guys. Um, so we're at an hour. Do any of you guys want to look at any specific tickers? I only planned to go for an hour, but I also only covered 2 tickers, and I was gonna do 1, 2, 3, 4, 5, 6, but I fear that's gonna be like a three. I fear that's gonna be like a 3 hour video, which nobody's gonna watch. So concepts are the same. Is there any specific ticker that I'll do one more if anybody has one we want to look at?
I mean, what if you have something Delta? I did ask about coin, and you put a order block at 164, and tonight I think it's trading at like 180.
God damn,
Yeah.
that's a big move.
Yeah.
Dude, I think what's his name? Hitman was talking about. He's like, go look at crypto.
Yeah, and I posted one quick chart. I can pull up Bitcoin and we can take a look at it, even though I'm not gonna like probably fully chart it here for us. But let's just take a look at some of the things that we got going on, because it's similar. And there's, even though Bitcoin moves bigger just because of the sheer fact that we're talking about, an asset that's valued at $100,000 versus $500. So, our swings are going to be bigger in price, even though percent wise, they may be similar to like your indexes. But let's just pull it up here. So I got 4 hour chart, right? And if we look at like where our high time frame support and resistance are, I'm going to use this order block because the other one's pretty small. So 50 around 50,000 is our high time frame 4 hour support. We'll go ahead and use this one, even though it's internal. $100,000, just because I think that right around that $100,000 mark is high resistance. and it's a very important level for Bitcoin. As you see, like when we've popped over 100,000, we've quickly dropped below. So right around the $100,000 level is pretty key. Which you see is a $50,000 spread, right? which which is absurd. Which is absurd. Um,
50,000.
Man, I'm still mad that like I didn't tell anybody I know to like go all in at 7,000 when we saw that drop. But of course, like everybody's saying shit like Bitcoin's going to nothing, and you do worry like, well, what if it did? That's all of my life savings. Um, I guess scared money doesn't make money, right? That's what they say. All right.
Yeah.
So some levels I'm going to draw out here, right? And we saw this very similar to QQQ and SPY, right? That 4-hour sweep of liquidity, closing candles above it, but wicking below it. We get an internal change of character. We don't see an open fair value gap. We actually see an open bearish fair value gap. So we'll see if that gets taken, because here we had a 4-hour, right? In this range, we had a 4-hour fair value gap on SPY and QQQ. And that was, probably something around here. But you see Bitcoin drop through it, inverted it, and left a fair value gap open here, where we also saw price wick into this order block, right? And drop back down. So we will see if this decides to push back up or not. That will be interesting to me, because this could just be a fake out of an internal change of character and structure shift, just drop back down, into what is an inverted fair value gap already. So lots of interesting things here. But what I would do is look at this inverted fair value gap that then has come down near consequent encroachment and held without being invalidated by going back through it, and we're finding support right now. So that's kind of what I would look at on that one. Is a, let's see, this one's going to be a bullish inverted fair value gap, and it will be a 4-hour time frame, right? And here we saw that liquidity sweep, and here we got sell side, and we got buy side, and we got additional buy side up above. Okay. And ultimately, I'd just be looking for this inverted fair value gap to be my main, um, indication of whether price is going higher or lower. We drop down below that inverted fair value gap, right? We got this order block to hold support. If we drop below that order block, we're going to come down and take this sell side liquidity. I could look at this high to low here, and actually, I'd look at this high to low, this move here, and see that we came down below discount.
Yeah.
Near our golden pocket, but inside of our discount price range. We've popped back up, take that low hanging fruit, come back down, testing that inverted fair value gap, and I'd be looking for price to make.
क्या है?
Be looking at price to make these moves up to these different levels here, these extension levels, right? And then again, that extension level is just right below this order block. So, yeah, somewhere in between that. So that's what I'll be looking at. But if we see if we saw Bitcoin doing very similar things as SPY and QQQ, so you could ultimately, assess that in a similar way, that Bitcoin is really like something that the market is looking at for strength. And with all the stuff that's going on with the United States, looking to, make crypto, the crypto reserve, and kind of replace the gold standard that really isn't existent anymore, that doesn't back our money, but they're looking to back the money by crypto instead. And also, potentially the introduction to the fully digital dollar and the replacement of like paper fiat currency. So all those can be at play, and if those things continue to play out, like things like Bitcoin, which they say is a store of wealth, is going to continue to do well, which then can lead the market to also do well. So we definitely want to be watching crypto. But the I guess the one thing about crypto is that it continues to trade when NQ, even when the futures market is still closed. So it does give us some kind of, gauge on what the market might be doing ahead of futures opening. But at that point, once futures are open, I'd more be looking to futures than I would Bitcoin necessarily. Let's pop over just real quick to NQ and see what it's doing as well. So it's down a little bit. And then if we go back to Bitcoin, right, Bitcoin also saw that move down a little bit. It's starting to make a little push up. Why uh, in this wick, we're also starting to make a little push up on NQ. So, any of those are good enough to watch. I don't think Bitcoin is the be all end all, market mover, because I think there's a lot more to the market than, if Bitcoin goes up, the market goes up. But definitely, something to watch. Also, the US dollar is worth watching if you guys don't watch it, because there is, um, uh, like inverse correlation typically to the regular market. So you can definitely be watching like the DXY and see if it's if it's moving in confluence or in positive correlation or negative correlation to the market. And then you could also be looking at things like oil, bond market. Those are other things. All of those can be leading indicators to what the market is going to do or how it's going to react. But also, you don't want to like just get too muddled and confused with watching too many things if that's not something you're already doing. Maybe just starting to introduce or learn some of those things as well.
Mm.
Any other questions
Okay.
before we wrap up?
You you're gonna work at every Sunday night, Rustic?
Yeah.
Or
Yeah,
oh,
so I'm gonna
beautiful.
start doing this. I don't know if it's gonna be this late every Sunday. It's just
Oh yeah,
I did a live with a live private one with somebody earlier, and then I tried to hit the gym, and then this is just the time I came back. But I'm gonna try to actually
certainly.
schedule it a little bit earlier so that the East Coast traders don't have to stay up till 11 o'clock just to catch it. I think I used to do it around like 3:30, 4 o'clock, which seemed to work
Oh,
pretty well.
awesome.
Yeah, so I'm gonna try to do this every Sunday, and then I'm gonna try to live stream trading every Monday, Tuesday, Wednesday, and if Delta can hop on with me or not, like that's cool. I might try to have some of the other traders like Mar or Dog uh, uh, Dogman,
Yeah,
our new analyst. I might try to get them to hop on some streams as well. So we're just gonna try to do more interactive, more live, more
awesome.
content, just to give you guys some additional things. And then some things to look forward to, which we're still in the mix, is we're programming some automated trading bots that are going to be able to be commands that you guys can run that will identify high time frame patterns on the daily chart. And those will be candlesticks patterns specifically. It's going to be a scanner, and you guys will be able to put the command in, and those will be for swing trades. So it'll be like
Beautiful.
bullish engulfing, or morning star reversal, or
Yep.
harami, or any of those patterns. You'll be able to get like probably 500. It'll scan 500 tickers or more, and then give you the ones that have those patterns present on the daily
Jeez.
chart. So that'll allow us to be able to take long-term trades based on those patterns. So that's something we're working on. And then some other things in the mix. So looking forward to bringing you guys
Fantastic.
some extra stuff here in the future.
Yep. Yeah, Delta touched on that last night, just a little bit, and that's great. Awesome to hear it.
Very good.
Um, Great. Thank you again, Rustic.
Yeah, you're welcome,
And
Raymond, and everybody else who joined. I see Baxter and Assassin and Delta is all in here, and we had some other people drop off like Arman and Sean. Sean the kid was in here a minute ago. So thanks for coming in. We'll see you guys on the next one, and talk to you guys during trading tomorrow.
beautiful. Thank you. Wow.